Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Mason McDonald. Mason is a former hospital CEO turned full-time land flipper that utilizes his profits to invest in commercial real estate. And in just a minute, we're going to speak with Mason about how you can profit from land flips. But first, a quick reminder, if you like our show, CRE PN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Mason McDonald. Welcome to CRE PN Radio.
Darren, great to be here. And, if you don't want to check it out, the video version, we both have the face for radio and the voice to match. So
gotta put the tease out there. You never know.
Oh, yeah.
Anyway, hey, Mason, thanks for doing this. I'm looking forward to our conversation. Before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Yeah, absolutely. So I grew up in the house where the expectation was get as many letters behind your name as you can and go get a corporate job and work at that corporate job till you turn 65 and enjoy retirement. So that's what I did. When got a undergraduate degree in neuroscience with the intent to become a physician. Decided that was not the route for me and went into healthcare administration, got my master's degree in that, and jumped right into corporate America. Worked my way up to the top very rapidly. Year after year, got a promotion, became the CEO of a hospital out here in Colorado Springs when I was 26 years old, and hated my life. I loved my employees, loved my patients, but I was working constantly. I was hypertensive stage 2 at 26, 27 years old, and just couldn't do it anymore. And despite the title and the recognition in the community and the pay and everything associated with it, I wasn't happy. So that's what led me to real estate investing. Had always been interested in it, read all the books, listened to the podcast and everything, and stumbled across land flipping and, got started in November of 2021, quit my job soon after getting started. And on my first deal made 114 grand and never looked back since. So here I am now, a year and a half or so in and doing better than ever.
Well, a win like that on your first deal, that'll make anybody a believer. That's awesome. That's congratulations on that.
Appreciate it. And I don't recommend people quit their jobs before they even sell the deal. So I quit my job before I sold it. I just knew the value, but it was just time for me to get out.
That's great. Well, I appreciate you sharing the background story. Let's talk a little bit about land flips. I guess the first thing I would like to hear from you is what kind of land are we talking when we say land flips? Are we talking forest, farm, pasture, desert? What are you dealing with when you do? What are you looking for when you do your raw land flips?
Yeah, I look for land that makes me money. I don't overly specify the criteria. I cast a wide net, and that's not how I started. But the deals so far this week, in May of 2023 that we're recording this, one is zoned for multifamily, one is zoned mixed use commercial, and one is a vacant infill residential lot. So kind of all of the above. You're going to get different returns depending on the type of land and a different disposition or exit strategy. So I do everything. But for the most part, my business is vacant infill lots in either suburban or kind of rural subdivisions, and then commercial land. Love commercial land because there's only so much of that. And if you can purchase it at a discount, sell it at a discount, builders are building like crazy right now. So, it's a valuable product to put on the market.
Got it. So you said you've been doing this since 21. So uh, that not quite 2 years. It's like a year and a half is
Yep.
the
Bought my
time you've been
first
in.
deal November of 2021. So right at the year. So I'm about a year and a half in, give or take.
Okay. And so tell me a little bit about I guess you've kind of mentioned anything that'll make you money.
Mhm.
I think that's that's a good rule to play by. Are there specific uh, areas you look for, or what are some of the tells, or what are you looking for? Are you looking for land that people are behind on their taxes, or how is it you're
Yeah.
identifying a
Yeah,
prospect?
absolutely. So from a macro perspective, what I look at is transaction volume in the area. Is there land for sale, and are people buying it more than it's coming up? So and there's certain ratios you can utilize to determine the competitiveness of a market. So first and foremost, I look at transaction volume. Second, I look at more nationwide trends. Get on the census website and see what the net migration is, and target counties where people are moving aggressively towards, as well as the counties surrounding that area, and cities and neighborhoods surrounding that area is kind of the larger level that I look at. And then to get more granular of the specific ownership criteria. So all my marketing is direct mail. It sounds like I'm selling snake oil when I talk about land flipping, because the strategy is so simple. But I mean, we direct mail market. And I target people that have usually about 10 plus years of ownership on the property they own. As I do more marketing campaigns, my ownership criteria changes because there's so many inherited lots and stuff like that have happened over the past few years. But minimum of 10 years of ownership, and typically I target out of county, out of state owners. So you can vary your marketing strategy by years of ownership and location and proximity to the property. That's going to get you a greater response rate. But where I'm at in the business is I try to cast a wide net. So I have motivated sellers that are happy and willing to get rid of it, and I have unmotivated, sophisticated investors that are willing to part ways at their property to claim a loss. So it's kind of anyone and everyone. And for people getting started, I recommend, picking an area that you understand, where, I've got my markets that I know if I invest on this street in this neighborhood, it's a great deal. If I invest one street over, so, as the crow flies, it's 1,000 yards away, it's a horrible deal. So, intimacy and knowledge of the individual market is helpful, but there's over 157 million parcels of land in the United States. You can find deals everywhere.
So speaking to that, the intimate knowledge, is there a specific area that you focus on, or it sounds like you're kind of far and wide? How do you get that intimate knowledge if you are going far and wide?
Yeah, I think it's just after doing a certain number of deals in a particular area. For me, not to like give away my honeypot, but I'm an
Right.
abundance guy. I invest heavily in Pagosa Springs, Colorado. It's a small mountain town just outside of Wolf Creek Ski Resort. That's where I got my first deal. I own a commercial building there. My parents just moved there. I want to move there, so I know it. I understand it. I love it. I'm going there, tomorrow to go visit and have fun down there. So I know that market really well, and I've developed great relationships with my realtor down there, because I don't sell the properties myself. I pass them off to a realtor. Know the title reps. I'm gonna bring a breakfast on Friday. You get to know a market like that, and you start getting more deals. Just developing community relationships in general. So, just once again, it's transaction volume. The more I do in a market, the better I get to know it. I'm at a stage now where I have an acquisition manager that manages all acquisitions for me, and I kind of target the market. So we're able to share that knowledge, and he has his own markets he knows too. So able to grow that way.
Got it. So you mentioned that everything you're doing is direct mail,
Mhm.
and it sounds like you've zeroed in on a market. did I hear you then? Are you looking for other markets as well based on kind of the demographics and that? Is it?
Yeah, so I invest in Colorado and Arizona right now. People are moving to Colorado and Arizona. Eventually we'll expand to where everyone is moving, which is, you look at the data, and people are moving to Nevada and Texas and the Carolinas and Florida, or to name a few of them. Bozeman, Montana, and some other places. Boise, Idaho had a great run for a couple of years there and everything. So you look where people are moving. So when I say I'm in a market, I'm in probably 4 dozen within Colorado and Arizona, depending on your definition of a market. But that's kind of where I'm at and where I focus right now.
Got it. So I'm always fascinated about marketing, and strategies and that. Doing it direct mail, is there a number of mailers that you find you need to get out to create a pipeline of opportunities, or is it more of in the qualifying that you're able to uh, create more of a I don't know, a response piece that people are responding to? um how are tell me about how many numbers are you feeling like that you need in order to get some responses?
Yeah. So if you can scrub your data to a certain extent using some of that ownership criteria that I was talking about, if you're sending 5 to 10,000 pieces of mail a month, you're going to have a 7-figure business flipping land, depending on where you're sending the mail to. So I try to, my goal is right around there, about 7,500 to 10,000 pieces of mail a month. My mail costs me 57 cents a letter. I anticipate a 1 to 4% response rate dependent on the market. And then a deal close rate, varying from there of, 1 out of every 15 leads we're closing deals on. And that math might not sound great for some people, but if you can spend, $4,000 or $5,000 on marketing and get, 4 or 5 deals that net you anywhere from 10 grand to up to, we had one that just hit the market. We paid $350 for it. It's going on the market for $675. And that came from a 57-cent postcard saying, "Are you tired of paying your property taxes? Give me a call." And it's insane. And, the guy that sold that to me was a former hedge fund manager out in New England. And he just wanted to get what he put into it. And, the market's changed, but why people sell to me is I offer quick cash and convenience. And I think a lot of people try to glorify what they do, whether it's in real estate or anything in life. And for me, I'm a pawn shop. I buy land for cheap and I sell it for more. I never try to screw anyone over. I tell them, if you want top dollar, go to a realtor. But if you want quick cash and convenient and you want to get rid of the headache, I'm here. I'm here.
I love the kind of the simplification of your model from a standpoint of the way you position yourself. I think there is a lot of people, and I think we all fall victim to it at some point, about trying to elevate our status in the world by, you know, uh, whatever it is, title or training, or however you do it. But the reality is, and this one of the things that's always been an appeal of mine in real estate, is just how simple it is. It's where a buyer and seller meet.
You're right on. And it's same and agreed, where self-certainty is one of the most off-putting things for me, in a person in general, where, I have a strategy and it works. And it works great for me and it works great for my life. It doesn't make me better than anyone or makes me smarter than anyone. It's just, and I'm not certain that it works. I try to change my mind all the time, but I think that's something that at the beginning of this business actually caused a lot of slowdown. Is I saw what everyone else was doing, and I sold that first deal, made a ton of money. And my wife said, sit on the couch and get your blood pressure back to normal after you left your job. And so I did that, and I got overly creative. I started texting, I started calling, I started doing direct to voicemail and email and all this other stuff, and I didn't get a deal for 4 months. Then I sent 1,000 mailers, and I got 5 deals that made me another 100 grand. And some are still paying me because, offered, seller financing on it, and they're still paying me today. So it's funny, you got to stick to what works when you see it, but don't necessarily think it's the right strategy. Get creative, like from a split testing perspective, but stay consistent.
Yeah, well, I just again the simplicity of it, and I think that what I find is one of the common things that I find when I speak with investors. Most can remember their first deal, and most can remember where they were, like in that stage of life, or whatever it was when they committed to it, and whether there was an amount of fear, or they didn't know if they were going to be able to do the deal, or just they were stretching, or whatever it was. There's an emotional tie to that, and it's a very base level thing. It's not about some high level uh, you know debt swap, or things like that. It's more about just like getting in the deal and getting the deal done, kind of thing. And I think there's that common thread there, and I would think that a lot of your approach would appeal to a lot of people, just from the fact that it is simple, and it's very clean, and it's not an anticipation of a big number where maybe somebody encouraged you to list for something for a bigger number, and then all the while they're beating you up, telling you got to take the number down because the market's changed, and all that
Oh,
that stuff. So
oh yeah. I mean, you're right on. I remember exactly where I was whenever I bought that first deal. It was my 27th birthday actually, and my wife and I flew out to St. Croix that next day. So I remember every emotion that went through my head, especially with the idea of leaving an executive position, which couldn't have done it without my wife. She's the stable software engineer that pays the bills and allows me to go be the risky entrepreneur out there. And I I think whenever you're looking at things and you can take emotion out of the decision making and just look at numbers, then it becomes a lot easier. Where I look at some of the numbers of properties that have maybe been sitting on the market for like 30 or 60 days, which is normal now. We might have been spoiled a little bit in 2020 and 2021, but I look and it's like, hey, dude, if you sell it at market price, you're going to get a 276% cash on cash return. And that 6 months, you annualize that, you start seeing what the APR is. And it's like, well, okay, I could reduce it and get, because we all think about that disaster case scenario of like, okay, well, if I had to liquidate, I could still make all my money back plus 20, 30%, which is, you get spoiled in this business with the returns, but 20 to 30% is fantastic. Still, assuming it's supporting your operating costs and everything, you can factor that in.
yeah, absolutely. I mean, in any market, if you could hit 20%, people would, you thought you hit a home run. So
Oh yeah.
that's great. So you talked a little bit about your approach in finding the properties. Can you talk a little bit about how you structure your offers, or is there any kind of, is it basically just a conversation, what they're looking for, or do you have some sort of a, you know, kind of how do you view that, going in? Is each one individually different, or do you have some sort of a baseline formula that you work with?
Yeah, so both. Each one is different. I do have a formula that we kind of work off of, and basically I attempt to acquire the purchase price. I never self-close. I go through a title company for everything, which a lot of people in land flipping say self-close. I disagree. One wrong signature on a warranty deed ends up in more problems than I care to deal with. But I try to target that acquisition price for 50% of what the median value of sales over the last 90 days in that particular neighborhood or particular market is. Where I've actually made the goofiest returns, because I can't think of a better word for it, has actually been where it's a little harder to price. Okay, there's not a lot of transaction volume, but I know it's a very desirable area where people have these beautiful homes, and it's a great community, but there's just no data because one lot comes on the market every 2 years. So there is a little bit of nuance there. But in general, I try to target about 50% of what I expect it to sell for. And I can go up and down from there depending on the amount of transactions in an area, where some places I can get for 20% and then I can sell it at 60%, and the margins end up, kind of being the same and everything. So there's various formulas that I use depending on the competitiveness of the market, because I've got the big deals that'll make me, 100, 200, 300 grand per deal that might take 6 to 9 months. And then I've got the transaction business where it's, and that's what I'm kind of working on building up more of, the more active of the active business of, hey, I know if I buy this property, it's essentially liquid cash because I could put it on the market and then it'll sell in 12 seconds. type of thing. And, I've got friends that are doing this in, markets in Florida that, I mean, it's liquid cash for them of, from initial conversation to under contract to buy to bought to under contract to sell is sometimes a 10-day timeline. So that's liquid cash out there.
10 days, that's fast.
Oh yeah.
That's really fast. So let's talk about how you or the sale of the property. We've talked a little bit about the acquisition. When you go to sell a property, is it a cash sale, or do you do any kind of land contracts, or do you offer any kind of financing, or how are you setting that up?
Yeah, it varies once again on the individual property, where a lot of times I don't know who the end buyer is, just because I give it to a realtor to sell. I've got a handful that I will offer seller financing on, just because a 20% down payment will give me most of my cash back in the deal and pay off the realtor. And then it gives me monthly cash flow to support the operating expense of the business. But I don't do contract for deed. I do note and deed of trust, where I have come close to having to foreclose on people. But one of the beautiful things about it is there's so many people that just want the American dream of owning a piece of land that they can build their own house on, but maybe they have bad credit or anything like that. So I don't do credit checks. I just do provide a proof of income. Everyone goes through hard times, and I had one person that I did a seller finance deal with, and he just stopped paying. I tried to personally get in contact with him. My escrow company or note servicing company tried to get in contact with him, and found out he had family members pass away and he'd been scrambling. So what we did is, finally, when he communicated with me, I was able to reduce his payments to about one quarter of what they were, because he wanted to keep paying. He didn't want to lose the land, and never missed a payment since. So it's fun being able to help people that wouldn't be able to get help. And I'm making money, and cash flow is nice in a business that is a purchase and sale business. And so it depends on the necessary steps that you need to take to get the desired return. But I've got a piece of land that we closed on this morning, that it's the only multifamily piece of land that's going to be on the market in Garfield County, Colorado. And I could develop it and turn my 6-figure profit into a 7-figure profit should we decide to. So many disposition and exit strategies make land a really attractive place to be.
Got it. So you strictly do the through the realtor. You list all the properties you sell, and then realtor brings you a deal.
Yeah, for the most part, I've sold a few, off market, Facebook Marketplace or Craigslist. One I was driving out to take pictures of myself whenever I first got started, and there was a contractor working on it, and he said the neighbors would be interested, and so I paid him a referral fee, and the neighbors bought it, and I didn't even have to put it on the market. So it varies, but as I've grown and scaled, and I look less at the 5, 10, 20K profit deals and look more at the 50 to 500K profit deals. I'm not sophisticated enough, and I left my job to not have a real job. So I don't like sales. I give it to people that like sales, that understand it better than I do.
Got it. So where do you get your capital to buy the properties? Or is this all self-funded? Are you raising any money, or how are you doing that?
Yeah, absolutely. So I started by using all my own money until I recognized that I would limit growth. And I was tired of the entrepreneurial life cycle of, I'd buy a bunch and I'd feel really poor, and then I couldn't market anymore. And then I'd sell a bunch and I'd feel really rich, and then I'd go buy a bunch, and over and over and over again. So I learned the value of other people's money pretty quickly. So I have a few opportunities where, within my network, I've got a pretty high net worth network, just being at the executive level for a while. So I've got people that give business loans where I, just pay them interest only payments and everything. And then I do a lot of joint ventures where, I had an investor JV with me on a deal. They provided all the cash, and I gave them 35% of the profit of the deal, and their cash on cash return after 73 days was, I think, if I remember right, 62%. For pretty minimal investment. So they were stoked with that, and ended up investing 10 times as much, actually 15 times as much with me on the next deal. So we do profit split joint ventures, and there's some companies out there that offer financing to people flipping land, but the rates, and they're all JV deals because the rates would be considered usury, and banks won't lend to people like me doing this kind of stuff. So that's one of the pros and cons of this business is there's minimal competition because there's lack of access to institutional capital. But that's also a pro of it, of if you can find the capital, there's more deals than people know what to do with. So that's something I'm working on kind of on the side, is creating a company that will be able to fund everyone's land deals that's doing this. I've got some big time investors that are willing to invest with me on a venture like that. And so that's something I'm excited about whenever I'm able to actually speak more about it.
Now it sounds exciting. That's cool. So, there's a lot of talk. I mean, we are recording this in May of 2023, and the economy is been chugging along. There's certainly lots of inflation, and interest rates have gone up quite a bit. Does any of this affect your ability to find or sell raw land deals?
So yes and no. The answer yes is because from like a slowing down, there's just a typical slowing down of the market a little bit right now, depending on where you're at. Some markets have remained consistent. So we're getting back into like the correction phase within real estate. But luckily for land, from a sales side, the last data I looked at it was March, and I probably should have been better prepared. And I think April data is out. March, we were down 6.5 million single family homes in the United States from an inventory perspective of what needs to get built. We're up 4.5% historically over building permits, and we're doing construction at a more rapid rate than historically. So there's buyers out there from the higher level, the commercial level, of builders are building like crazy right now because there's still an inventory crisis, specifically in markets where people are moving to. So, from a buyer perspective, it's slowed down a little bit, but there's still tons of buyers out there. From a seller perspective, people are hurting. My wife and I will go to Chick-fil-A, and maybe we eat a lot, but it costs $30 for us to go to Chick-fil-A. And for the average American, that maybe they inherited a piece of land, or they owned a piece of land that they planned on developing 10, 20, 30, 40, 50 years ago, they're happy to get the cash for it, because then they don't have to keep making property tax payments whenever cost of living and inflation is so high. So, and then once again, from the retail seller side, Mark Twain said it, buy land, they're not making more of it. So in a recession, people are typically going to flock to safer investment strategies. So, it's the idea of a land bank of typically most land, unless something weird happens, will appreciate in value over time. Of, I'd rather park my land or my money with land. And, you hear stuff in the news of, Silicon Valley Bank and all the other stuff that happens, and they're scared of banks. So, what do we invest in? We invest in dirt and stuff that comes out of dirt, minerals and stuff like that. So it varies. I'm not, I don't have a crystal ball or anything like that. I can tell it slowed down a little bit, but, still getting interest, and stuff is still selling.
Got it. Do you find there are more people looking to sell, or have you seen like your response rate increase to your marketing as the economy slowing down a little bit, or is that not necessarily?
Not overly. It all depends, because the past, I can say the past few months, as we've moved into newer markets, we're getting a significant response rate. So I think it depends kind of where it's at and what's happening. It's so market dependent. So some of them, like some counties in Arizona and cities in Arizona that we're marketing to, our response rate is insane, like 10% response rate for a silly little postcard that we sent. And we're getting a certain amount of deals out of it, but a lot of people are looking at retail prices. So to us, it's just, it's math. So we haven't seen from an acquisition side any sort of slowdown, but not necessarily seen too much of a pickup. So depending on the market, that is.
Got it. So looking forward, do you have any sense of, is there anything that would affect the market, increase or decrease, or is it basically there's just unlimited demand and plenty of opportunities, and as long as you find one and the numbers work, they're going to work?
Yeah, it's so hard to say. I think in general, you know, it's location, where, I have one piece of land that I paid, I don't know, 1,500, $2,000 for, that's been on the market at 15,000 for 7 months now. And I don't really care because I forgot about it. And that one right there is one that I'm going to end up selling, and I'll have to do like 5% down, 8% interest for 10 years type of thing, which is fine. But that was a more speculative market for me, where I kind of wanted to test it out a little bit. And whenever the dollar amount, you look at that return, if it sells at 15,000 on a $2,000 investment, minus realtor fees, whatever that math is, I allotted, there's a lot of return there. So I think it depends, on the location specifically. But if you buy a vacant infill lot in a beautiful neighborhood in Oro Valley in Arizona, you're going to be able to find a buyer, even if you have to do a price reduction, or you just hold it for a while, and let the scariness of the market, go away, which it will. It always does.
Yeah, no, I think the one thing I've learned about real estate is time. Time makes it all work. As long as you've got time, that's good. So Mason, you're making the money in the land flips. Tell us how you're going about investing in commercial real estate with your winnings.
Yeah, absolutely. So one of the benefits of investing in raw land and the way that I do it is there's no capital gains taxes that's paid. I'm taxed as if the land is inventory, which it is. So currently, working on building my commercial portfolio. I own one building right now that's getting renovated into workforce housing. It's in a small mountain town. So there's an affordability crisis in so many of these mountain towns in Colorado and along all of the Rocky Mountains. So you're able to do kind of a rent by the room, rent by the door model that's going to give, far breaks the 1% rule. But what's more attractive to me is depreciation. This year you can take advantage of, front loading the depreciation at 80%, after doing a cost segregation study. So that's kind of where I want to park my money, is just commercial assets that both cash flow appreciate and you can depreciate. So right now I'm looking at, after the pains and struggles of going through a renovation on a property in a mountain town, I'm looking for more simple passive investing, like single tenant, triple net lease, put something on a 15-year lease type of thing, and take advantage of that true depreciation to offset all my other income.
Hey, Mason, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker. And as such, I work with them to assess risk and determine what to do with the risk. And there are three strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And when we cannot avoid nor minimize, then we look to see if there's a way we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be interest rates, the Fed, inflation, whatever you identify as what you consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, Mason McDonald, what is the biggest risk?
Yeah. I expect my answer to be a little different than what people might expect. I was the CEO of a psychiatric hospital. So in terms of a risk management perspective, there's, in terms of overregulation and high risk, there's that's about as high risk of an environment as you could ever imagine. But for me, the greatest risk that I have is I fail at this entirely and have to go get a job again. So me being my own boss and, getting to live life on my own terms and having financial and geographical freedom, the biggest risk to me is I fail and I have to go get a job again, which is what 99% of the population already does. Because the margins in this business, where if I set my buy box criteria based on market data, which is what's available to everyone at 50% or less, I could liquidate and get all of my money back, all of my investors' money back, and be able to walk away. But that's not going to happen. Or should it happen, it's not the end of the world. But yeah, the riskiest thing to me is ever having to get a job again. So maybe not exactly the answer, that's expected or wanted, but that's what it is for me.
Oh, I love it. I love the, again, kind of the grounded answer in that, hey, look, this is working, but the risk is that, there's a chance it couldn't work, or might not work. But you've got a plan B, and that's kind of part of managing risk is, what if something happens. So
yeah, so we've got the liquidation plans should that ever happen or anything like that. So I don't over leverage myself. I have good relationships with my investors, and if I have to, my wife and I talk about it of, if we have to sell everything and start over, the amount of lessons that I've learned over the past year and a half should, crap hit the fan. There's no way we're going to start over and it'll take as long to get back to where we are. So, yeah.
That's all good. Good. Mason, where can the listeners go if they'd like to learn more or connect with you?
Yeah, I'm most active on LinkedIn. So if I'm sure it'll be in the show notes. If you look me up on LinkedIn, Mason McDonald, you'll find me there. Happy to engage with anyone there that wants to talk about land investing or, investing in commercial real estate or subdivides or any of the bigger deals we have going on the side. Happy to chat with anyone and everyone, talk about my story and see if I can help you. I also do coaching and consulting within the land space. So if you don't reach out to me on LinkedIn, I have a website, coachingwithmason.com, where I take on people that have a successful track record, either in their own business or in corporate America, and teach them exactly what I do. So I'm having fun doing that. I went from 24 direct reports and 500 employees to I have 1 employee now. So I've got an extroverted personality, and I love teaching people how to do it, because getting to see the coaching students have success and realizing they can leave their corporate job, it's fun and really inspiring to me.
No, I love it. Well, Mason McDonald, I can't say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Darren, thank you so much for having me.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CRE PN Radio.